So with our operating expenses, what we attempted to do was just kind of give a list of some of the more common operating expenses. So what you have here, wages, advertisement, web hosting, rent, etc. Similar to the entering in the actual income and revenue sources, you'll basically enter in the name of your operating expense here. You can change these here. So we'll put it at wages. Now, what we did is we separated out the startup month from the rest of the months. And there's a particular reason why we do that. A lot of times with startup businesses, the initial month of business, the costs are a lot higher. Sometimes with startup businesses, if you have staff, you have to train them. And so you may have extra hours from training. You may spend more money advertising businesses to get it off the ground and get people through the door. If you have web hosting, if you have a business come in and do the installation for it, there may be installation charges. So what we did is we separated the startup month to account for the possibility of there being some extra costs at the beginning of your business there. From there, well, so what you do is you would enter in what your expected cost is for your startup month for each service. So we have $500 for wages. I'm going to increase that a little bit. Let's just say we'll put that $5,000 for wages. For our advertising and marketing, I'm going to put $2,500 to start. Web hosting, $500 for the first month. Rent or lease, $5,000 for the first month. And then you just go down the line, entering in the specific amounts for your expenses. Now, keep in mind, like I said, you can change the expenses here that you see just to the left. Like I said, we have some of the more common ones, as well as some other spaces that you can enter in whatever you want. But you can go through and change these to whatever you like. So once you enter in the startup month expenses, the next thing that you want to do is you want to enter in the fixed month. So this basically accounts for what you expect your expenses to be after the start of the month on a monthly basis. Now, there are two ways that you can enter in the expenses. You can do them as a fixed monthly expense, or you can do them as a percentage of your income. So it basically just gives you a little bit of flexibility. In some instances, for example, like wages, you may do just based off a percentage of your revenue. Where in certain other instances, things like advertisement may have a fixed monthly amount. So it allows you to choose. If it's something that is a fixed monthly amount, you simply enter the information here. If it is something that is a percentage of your wages, then a percentage of your expenses, then what you would do is you leave that blank and you will put the percentage here. So we'll just say, I'm going to put it at, let's just say 30% for now. Just going to make up numbers from now. Okay. So what you would do is you would do that for every one of your expenses. You go through, you list your expenses here, you put what you expect the expense will be for your startup month, and then from there you put what you expect that expense to be, whether it be a fixed monthly expense or a percentage of your income or revenue. Moving right along, we have our startup costs. Now, startup costs are typically one-time expenditures that you spend when starting the business. So those can be things such as land, or if you purchase a property, that can be buying the building, or if you need to purchase large equipment to get your business started, that can be equipment as well. So under the startup cost area, you have an area for inventory. That typically includes any large inventory that you need to purchase up front to get your business started. So let's just say, for example, you have a business where you sell homemade candles, or you make candles and you need to purchase things to create those candles. This is where your inventory would go. If you were purchasing land, this is where you would purchase the land. Now, just as the other two parts, the expenses and the revenue sources, you can edit these as well. So you can change it to whatever you like. We just have some of the more popular ones that are here as well. But there's land, building and leasehold improvements, equipment, machinery, furniture, fixtures, signage. There's automobiles as well as other. So we just plug some numbers in here for those, but you can enter in whatever you like for those. Then moving along, there's an area for current assets. So if you are an existing business, or if you have some existing assets, you can enter that information here. So the area for cash, just whatever those other assets might be, investments, existing inventory, or an area for other. You just put the total amount, the value of what those assets would be as well. And you have your existing fixed assets. Now, just as you will enter in your fixed assets that you are going to purchase, you would, if you're an existing business who already owns assets, you would enter in your existing fixed assets here. So things such as land, or if you own a building, equipment, machinery. If you do own a building, you may be accounting for a depreciation in that building. So this is an area where you would enter in your total amount of depreciation claimed to date for that building. In this area here, you would enter the years that you have remaining on what you can claim for depreciation for it. So, you know, if you own a building, you may be familiar with claiming depreciation on your property. So this is essentially where you would enter how many years that you have left. Equipment also depreciates. So if you don't know that information, that is something that you can reach out to your accountant and be able to better assist you with as well. Moving right along, the next section, we enter in our liabilities and owner's equity. So this is where you'll enter in the stockholders' equity. This should be basically if you receive any investment dollars, whatever that dollar amount is, you'll enter it here. If there's other liabilities long-term that you have or other investments that you have, you'll enter that information here. If you have like an interest rate that you're paying out on that, you'll put it here as well too. This isn't where you put your loans yet. This is basically where you would put essentially investments. There is another place a little bit further down where if you have like a bank loan for your business, we'll put that as well. But this will be essentially areas if you have other types of investments, maybe investors, like I said, you would enter how much they've invested here. Over here, you enter for your other ones, you enter the interest rate as well as how many years that you have left to pay on it. And this information here is where you'll enter in your payroll tax as well as your overall taxes. Again, your accountant will be able to assist you with this if you aren't familiar with the payroll tax, what should be for your area. But you'll enter in what your expected payroll tax is, your income tax, and then you enter in any expected interest earned on funds that you'll have in the bank account as you're conducting business. So typically, interest earned on checking accounts is relatively low amount. We put 1% in here. We just plugged in 10% for our income tax as well as a 13% payroll tax. Now, this is the area that I mentioned a little bit earlier that if you have any loans, you'll enter your loan information here. So if you do take out a business loan, this is where you'll enter that. So you enter your overall loan amount. Let's just say we take out, I'm going to say 500,000. So that's 50, 500,000, right? All right, so 500,000. I'm going to make up an interest rate. I have no clue what they are right now. I want to say 5% interest rate. We're going to say the loan is a 7-year loan. It'll show what the monthly payment would be. If you are a business that may have multiple loans, it essentially leaves you space to do up to 3 loans, and you can enter in the loan amount, the amount of interest, their interest rate, as well as how many years that you have for the loan. So you'll enter that in years. And essentially, that is it for what you will do for the start sheet.